My goodness gracious, good morning. I promise not to filibuster like the good Reverend Emmanuel Cleaver, my friend and colleague from the other side of the state in Kansas City. He's a great man on financial services and has done a tremendous job. And he's a preacher, and he loves to tell stories, and he's got himself a captive audience here. So thank you very much for having me here today. I want to thank Brad Douglas for that kind introduction. And I'm grateful that everyone in the room has put aside some time to travel to DC and share with lawmakers what makes credit unions absolutely so essential to American communities and the U.S. financial system. I'd like to give a special shout out to our Missouri institutions represented here this morning, including Electro Savings Credit Union, be sure and wave, Together Credit Union, St. Louis Community Credit Union, and Vantage Credit Union. It is important to understand the special status that credit unions have in the financial services industry. Credit unions were indeed created to provide financial services in a democratic, not-for-profit, and cooperative manner by utilizing the ownership and control of a membership base. These characteristics are the foundation of their tax-exempt status, and I believe that credit unions should maintain that status. Maintain that status as they continue to offer the services that make them unique in the banking industry. Due to the complexities of the nature of credit unions, I believe we must be careful when crafting legislation that affects this very important industry. As many of you know, in Washington, I serve as the vice-ranking member of our House Financial Services Committee. And our vision is for the United States to remain the economic center of the free world. That means having the most vibrant financial markets for deploying capital to America's small businesses and families, the foundation of our economic engines. And it means protecting our national interests. It means seeking housing affordability through greater choice and competition, not social fiat. We want regulation that is data-driven, leading to smarter ways to protect investors and consumers as we continue to monitor the safety and soundness of our financial system. Committee Republicans remain committed to supporting America's credit unions, and a few ways to do this is through providing additional regulatory relief and examination fairness. The committee must pass the Taylor Act, which I am a proud co-sponsor of. We also are concerned with the cost of compliance for CECL and have urged our Democratic colleagues to bring H.R. 3182, if you're on the Hill later on, talk about 3182, the CECL Consumer Impact and Study Act. It needs to be brought to the floor. This bill would stop implementation of CECL and require that its impacts are appropriately studied before any further action is taken that could negatively affect consumers. Data privacy and security are other policy areas that committee Republicans are examining, and we are seeking input from industry on a wide scope of questions, including what kinds of data should be protected, how should this data be protected, for how long should this data be protected, how are privacy rights enforced, should consumers have ownership of their own data, How do we ensure that consumers know how companies are using it or selling it to third parties? What types of disclosures or opt-ins or other tools do we need to ensure that individuals know how their data is in fact being used? These are the big questions, and we are collaborating with industry and regulators to establish, I think, a set of principles and standards. I'll also briefly mention my work on the Diversity and Inclusion Subcommittee. I am the ranking member on D&I, and this new subcommittee that has just been introduced in the 116th Congress, and I've spent the past year seeking to ensure that the financial services industry, along with, frankly, many other service sectors of the U.S. economy, is reaping the benefits of our country's fine diversity. Women and minorities are growing their numbers and securing leadership positions on Main Street and on Wall Street, though there is still work to be done. The subcommittee is identifying how financial services companies can continue to invest in diversity and inclusion and change business culture and environments from within. While we need more data and information, research shows that diversity and inclusion can bring both social and economic benefits to the workplace. McKinsey & Company published a study in 2015 identifying a direct correlation between corporate diversity and the profitability of a company. Diversity can help drive productivity and innovation and good decision making. We know that diversity can drive collective intelligence by helping teams remain more objective, process information more carefully, and even price stocks more competitively. When we talk about how diversity is good for business, I appreciate that it can encompass several very difficult facets. It can mean that a company's profits are growing, or that a company is attracting a talented workforce, or that it is attracting more investment. All of these things are indicators that we are moving the ball in the right direction. Diverse firms have proven to be more innovative than companies with less diversity. It is in a company's own best interest to hire and develop a diverse workforce and create an inclusive environment. The market rewards companies that successfully recruit and retain women and minorities. Based on that premise, and on strides the industry has made in recent years, I would argue against the need for government intervention, such as imposing diversity standards or sweeping mandatory reporting on the private sector. But legislation has been proposed that would put mandates on industry without considering the realities facing institutions that are smaller or located in less populated areas. These actors face different challenges than bigger institutions located in higher population areas. And I believe that onerous reporting requirements would impose significant burdens on institutions with, say, fewer than 50 employees. And these concerns must be taken into account when considering future legislation. A one-size-fits-all approach simply does not work when it comes to legislating around workplace culture, retention, and hiring issues. When you go up to the Hill and you speak with lawmakers and their staff about these very important issues, you have a fantastic story to tell. A story to tell about the role that credit unions play in America's financial system. You have a tremendous impact on the local communities that you operate in and on the lives of the people that each and every one of you serve. I want to thank you again for traveling here to not only fight for your businesses, but also for the interests of your customers. Thank you for your kind invitation. I wish you a tremendous work. I can't wait to visit with some of you on the Hill later today. Best wishes.